Hey, hi everyone. I'm going to start the webinar a little earlier, so in case there's technical difficulties. But yes, I already see people here, so hello. Cool, let's just wait for more people to join and then we can start. Can you guys let me know how your trading week went? Last week we did EUR/USD buy. Did anyone get in on that? Also, can you guys just let me know in the chat box if you can see my screen, if you can hear me clearly, if everything is good? Because I don't want to be talking to myself. Okay, cool. It's 5:31 here in Singapore. Maybe I'm gonna do like a really quick intro this time so that we can spend a bit more time on the charts. Hello, hello. Okay, hi everyone, welcome to today's live trading session hosted by IC Markets. Hi AJ. Hi. Hi the rest of you who just joined. Hi Jamilo. Thank you for responding. I thought I was talking to myself as usual. Hi Henry. Henry's like XAU USD. Okay, let's see if we have time for XAU USD. We did EUR USD and it played out really well last week. So I would want to try to jump onto like continue with EUR USD, and then if we have time we'll do XAU USD. Cool. Okay, I'm gonna like do the intro really quick so that we have more time on the charts. So welcome to today's live trading session brought to you by IC Markets. Welcome back for those who were here last week. Before we continue, as usual, I have to go through the disclaimer. Please do not take this as trading advice, any kind of investment or financial advice. These webinars are purely for educational purposes. The only reason you should be here is to want to grow as a trader and then want to learn from a different trader. Other than that, this is not a signals group. Whatever I'm sharing with you guys is purely my own trading style and purely how I would take the trade, but please do not follow if you have not done your own due diligence and you have not done your own research. Okay, so trading Forex and CFDs carries a high level of risk to your capital and you should only trade with money you can afford to lose. Okay, do not sell your house, do not go all in. Please be cautious when you are trading. We do not want to get burned. Okay, you know what? I'm gonna stay here on the disclaimer for 1 minute so you guys can read through it. But this is an educational webinar, okay? When I say I'm going in the trade, I mean me, okay? Not you, me. I am going in the trade. Okay, cool. Introducing your host. For those who don't already know me, my name is Cassandra. You can call me Cass. I am an investment analyst and a prop trader from Everest Fortune Group. So Everest Fortune Group is a research firm who has been the finalist for the best forex and best equity research for multiple years that you can see. So the reason I'm sharing this is so that you guys know you are in good hands, okay? But that being said, again, I just want to remind you guys, whatever I am sharing with you guys is purely my own trading style and my own trading experience. Because like, you know how like sometimes you come onto this chat, like webinars, and then it's a different speaker? That speaker will have a different trading style from me. Hello, Ahmed. Hi, Duke. Welcome. Okay, so our agenda for today is to look at key approaches, cheat sheet checklist, which is super duper important for looking for profitable trades. Okay, so I used to not use this cheat sheet. I don't even know why I don't use this cheat sheet when the cheat sheet was there. Okay, so we're gonna go through this cheat sheet in a bit, use it, and then it will help you look for profitable trades better. And then we're gonna look at the live charts. So this is the cheat sheet I'm talking about. If you guys want a screenshot. If you already have it, let's just wait for those who don't already have it. Take a picture or write this down or whatever it is. It is important. I'm gonna like throughout the webinar, I'm gonna keep pulling out this cheat sheet to show you guys how I use this cheat sheet to get my setup. Good afternoon from Dhaka. Hello. Good afternoon from Singapore. We're heading into evening in like 30 minutes, but yes, it is still afternoon now. Everyone good? Everyone captured? I don't really teach smart money concepts. So what I'm gonna teach is my style of getting a setup today. But I mean, on my next webinar, we can talk a bit more on the smart money concept. Oh, just to remind you guys, for those who don't already know, I specialize in technical analysis. Okay, so if you're gonna ask me anything about like fundamentals, I may not be able to answer you to the best of my abilities. But ask me about technical, I should be able to answer you and guide you. Okay, because every trader and every investor has their own style of trading. There is no right or wrong. It's just whatever works for you. Because I know someone who used fundamental trading and he's like very profitable. I know people who use purely technical analysis and they are also profitable. There is no one way to do things. It's just whatever works best for you. So what works best for me is actually technical analysis, and I'm gonna stick with that for now. Okay, cool. So I'm just gonna go through the cheat list sheet for a bit. So we're gonna look for horizontal levels, which is basically support and resistance. This is super duper important. If you cannot identify support and resistance, swing high, swing lows, you are gonna have a very hard time looking for a setup because your swing high, swing low, support resistance is going to play as your entry, take profit, and your stop loss. Okay, so if you cannot identify that strongly, I do suggest you guys like mastering support and resistance, and then we're gonna back support and resistance up with other things like Fibonacci levels. So Fibonacci is gonna help you find the strength of those support resistance I'm talking about. And then we're gonna look at trend lines and channels. They don't hold a lot of significant value compared to support and resistance, but it is good to also master them because you want to know where trend is going. You want to know if price is going up or down. Other than that, it's like other chart patterns, you know, like triangle, wedges, double top, double bottom. And these are basically indicators, which is the death and golden cross. Any natural moving averages, these are all indicators. Stochastics, RSI, these are all indicators that I personally do use. Correlation. So when I talk about correlation, I mean, okay, for example, if we're looking at oil is very correlated to the Canadian dollars. Why? Because Canada is a very big producer of oil. So if oil goes up, usually, not all the time, but usually the Canadian dollars will go up as well. That's what I'm talking about when I say correlation. The same as EUR and yes, EUR and GDP. Sorry, did I say GDP? I mean British pound. Okay, and then Australian dollars and the New Zealand dollars. So these are examples of correlation because they are like usually if the Australian dollar goes up, the New Zealand dollars will also go up because they're kind of like tied to each other in a way. Okay, other than that, we're going to look for like reversals or breakouts. So other than looking for a support and resistance, we need to know whether we're going for a reversal or a breakout. I usually do a lot more reversals than breakouts, but I mean, it depends on what the chart is showing us. If the chart is showing me breakout, then we're going to do breakout. If the chart is showing me reversal, we're going to do reversal. Okay, so that is our intro. We're going to head over to the charts. Other than Henry's, who is asking for XAU USD, if you guys have any requests, put it on the chat box and I will go through it if we have time. But I do want to start with EUR USD because, oh yeah, Jamilu, did you get in on that trade last week? Did you get in on EURUSD last week? Let me pull up my charts. Okay, so this is what happened last week. I took you guys on Monday, but this is my trade on Thursday. So in total, last week I did a total of 6.5% profit. Okay, but I mean, I started negative, so I'm back to positive again now. This was my trade on Thursday. So I wrote here reasons for buying is because it's on an uptrend, moving in uptrend, Ichimoku showing bullish, no divergences, no indication of sudden trend reversal. So I was very confident and good that it was an uptrend. Same as our trade on Monday. If you guys followed my Monday analysis and if you guys did your own due diligence and got in, you should have made 2% on Monday. This trade on Thursday made 4.5%. On lower time frame. Okay, yeah. So we're gonna reanalyze EURUSD again because last week we did good on EURUSD, so there's no reason for us to suddenly look at another chart. Because like if something is going good, you're just gonna stick with that something until it stops going good and then it's time to go look for something else. Okay, so I'm gonna delete everything. I do this every time I want to do an analysis because I do not want to be swayed by the previous analysis. Okay, let me start with, oh, can you guys let me know in the chat box if you guys are day traders or scalpers or like swing traders, because that will depend on the time frame I look at. I know Jamilo is a day trader. I ask this every time and every time he will tell me he's a day trader, but what about the rest of you? Okay, cool. So I guess we're looking at day trading. So day trading, I personally am slowly going into day trading as well. I used to be a swing trader because I'm like a mother and I have toddlers and I'm tired. But now I'm slowly going back into day trading. So for day trading, the time frame that you want to look at is 4 hours, 1 hour, and then maybe 15 minutes. I feel like I don't like going below anything that is below 1 hour. Reason being because I do not like the smaller time frames, right? The structure of the charts is not as strong as those that are from the bigger time frame. So I like to still reference the bigger time frames and not use too low of a time frame. So I think 15 minutes should still be good if you are a scalper, but as a day trader, I feel like structurally it's not going to hold. Okay, so let's start with the 4 hours. I mean, on the daily, it's very clear that it's on an uptrend. The reason that we're going through different time frames is to see trend. So the first thing you want to do is look for trend, whether it's a up or down, because whether it's up or down will determine if you are going in for a buy or sell. If price is going up, naturally, I would want to get in on a buy. If price is going down, I naturally want to get in a sell because I do not want to go against trend. There are traders who go against trend. You can make profits from going against trend. It's just that I think it's risky. So I prefer waiting for the pullback and then getting in on a buy at the pullback if it's an uptrend and getting in a sell at the pullback if it's a downtrend. So let's look at the 4 hours. So we've already established that on the daily chart, it is an uptrend. Can you guys let me know in the chat box if you see any other trend other than uptrend? I'm gonna show you guys why I see a very clear uptrend. So an uptrend, you just need higher highs and higher lows. So this is higher lows, higher lows, higher highs, higher highs, higher highs. It has not made the last higher high, but it looks like it's still like we don't assume that trend has suddenly changed unless there are indications. So right now, I mean, I haven't pulled out everything, but like I won't suddenly think that price is going to turn downtrend. So at this current point of time, I still think that price is on moving up. So we are going to mark our support and resistance levels to prepare. Sorry, let me say that again. I am going to look for support and resistance level to prepare for my entry, stop loss, and take profit. This is an educational webinar. Do not follow my trade blindly, okay? Do not follow my trade blindly. I may be wrong. There is a good chance that I am wrong, okay? But yeah, don't follow me blindly unless you have done your due diligence. Let me see. Okay, so I'm gonna mark support resistance. Sorry, there's not a good chance that I'm wrong, but there are chances of me being wrong. So don't just follow me because I said so. Follow me because if you have already done your due diligence. Let me pull out the channel. I do want to make sure that price is just like moving nicely in this channel. Oh, it is. What a beautiful channel. What a beautiful channel. I do think price is going to reverse from here and then we can wait for the pullback. Okay, so I've got my resistance. This is a very strong resistance. How do I know this is a strong resistance? Price came here one time, two times, one time, you see that? Two times. If you cannot see that, you need to train your eyes to see that. Three times, four times, and then the fifth time. It may not be a complete move yet, but I mean, it looks like it's turning. So this is the fifth time price has come to this area, and the last four times price has rejected this area, except for this one time where it cut through and then turned back, but that was kind of like a fake out. So we're on the fifth time, and I think based on past movement, I think price is going to turn back right now as well, because everything to do with trading, right, is just factual and logical. There's no reason for me to make up stories and like come up with like conclusions unless the charts is telling me otherwise. So based on the charts, price has respected this area four times. Based on the charts, we are going to believe, I am going to believe that price is going to respect this area for the fifth time, because there's no reason for me to believe otherwise. Okay, we are factual people. Okay, cool. So I think price is gonna reverse here. I don't think I will not get into a sell because again, price is going on an uptrend. I do not want to sell in an uptrend. That's just my own personal preference. I know traders who still go against trend. They still make profits. I personally do not because it's like scary. Yeah, so I think price is going to reverse from here. So I'm going to wait for price to reverse and then do a pullback. I now need to figure out where is price going to pull back to. And then that's where I'm going to get in from myself. Okay, so to look for my possible pullback area, I need to pull out support resistance. I need to look for a really, really strong support area. Oh, this is a very good one. That's a very good support. I feel like, yeah. So there's one here, two here, 3, 4, 5, 6 supports. Price came here one time, two times, 3 times, 4 times, 5 times, 6 times, and I think if price were to come here the 7th time, it is most likely going to bounce, and then this is one of my possible buy entry. Okay, so oh yeah, speaking of which, right, I do want to remind you guys, I did 7% last week, okay? I did 7% last week, and I only took 2 trades. So I tell you guys this because I want you guys to know that it is not, you don't need to sit in front of the charts all day, every day, stare at the computer, look for trades, go through like multiple charts. You just need to find quality setups, okay? If you find quality setups, that will be enough, right? You don't really need to like, yeah, I only traded on Monday, which was the day I took you guys, and then on Thursday, and then it was a total of like 6.5% to 7. It could have been 7, it's just that I took profit a bit earlier than I should have. But yes, there's no need to like force trading. If you see a setup, you see a setup. If you don't see a setup, just rest. Go to the park, go to the zoo, hang out with your family, watch a Netflix movie. There's no point in forcing a trade. Okay, so other than this part, this blue buy entry here, I see another one here. So price came here one time, 2 times, 3 times, 4 times and then a fifth time where it kind of wicked and then continue up. So I do think this is another very strong level. That being a strong level makes me kind of want to consider getting in here for a buy. So now that I've already found two of my possible entry, right? I have a feeling price is going to come here. How much capital do I need to be a professional like you? Okay, it depends. So for me, right, I do not see trading as my main income, right? Trading is still my side income. So I personally, like, it's still my side income, right? So whatever profits I make from trading, I don't touch. I don't take it out. I don't go and spend. I don't go on holidays. I don't buy a new car. I just take the money and I reinvest. So how much capital do you need to be a professional trader depends on what you want to do when you win. Do you want to take the money out to fund your lifestyle? Do you want to take the money out as living expenses, or are you going to be like me, like you're just going to leave it there? When there's profit, you throw it back into the account, and then the account just keeps growing bigger and bigger and bigger, and then one day eventually when it grows so big, I will probably take it out. But at this point in time, I have no need for the extra money, so I just let it roll bigger and bigger and bigger. Like, I let the account grow bigger and bigger and bigger. So it depends on what you want to do with that funds. Otherwise, if you're just like me and it's just purely investment purposes, then I don't know, like even $1,000 would be good, because whatever you make is basically just extra income, right? Whatever you make is basically just extra income. That is why I only trade on Monday and Thursday, because the rest of the days I'm actually doing other stuff. Okay, so these are my two possible entries. I now need to figure out which one is the more likely entry. Oh, sorry. I'm sorry I gave you guys a line. It's actually not a line. So possible entries are usually a zone. So this is the zone. This is the first zone. I think price is going to react off. And then why did I put this zone? Because let me get out my pen. Let me get out my pen. There you go. Okay, so because price started here, it turns here, 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 here. Okay, so do you see like this, that this is the area where price kind of reacts off. It's never one line. It's always an area, like, or a zone. Okay, so I'm just gonna make this zone maybe a bit wider. Yeah, but I think this should be good. Okay, other than that, this zone, I'm going to draw. I'm very reluctant to look at gold, to be honest. I know Henry requested for it. We can still look at gold. I'm just a bit reluctant. Reason being because I did 7% last week. The week before, I did -2%, and that -2% was from gold. Yeah. So I'm just like, okay, gold did not really work out for me, so I'm a bit reluctant, but we can still see, maybe, maybe it would have changed already. Okay, cool. So these are the two possible entry. I now need to find out where do I think price is gonna react off. I have no time to explain Fibonacci, but basically if you guys attended my webinars, you should know how to use Fibonacci. I'm just gonna find as many levels as I can using Fibonacci and then hope for the best. Hope that I see something good. 1.27, nope, nope, nope. Okay, cool. So okay, this part here, the lower one, looks a bit more promising. But again, let me just give me a moment to like Give me a moment to just collect as much information. For those who don't know what I'm doing and you do want to know, just ask in the chat box. Otherwise, I'm going to assume you guys already know what I'm doing. Okay. Yeah. I think I've done enough to have a bias that this is the stronger support. Okay, so these two, I think price is going to come here and then reverse, or it's going to come here and then reverse. So right now I'm testing out the strength of these two zones. I feel like this zone is stronger. If price comes here, I'm gonna be very confident to get in for a buy from here, right? But if price just comes here, I'm like, okay, there is a possibility price might break and then continue down, right? So do I want to get in here? That is the question mark. So right now, because I do want to pull out some more indicators. Let me just pull out some more indicators. Okay, I'm gonna use Ichimoku. I really love Ichimoku. It's my favorite, one of my favorite indicators. Right, so Ichimoku is showing a very strong uptrend. Okay, this is my conclusion of what I think is going to happen. Okay, so there's a chance price might come down here and then from here and then you get up, right? But then because price is currently on a strong uptrend, it's on a clear uptrend, right? There might be a possibility it might not even reach here. There might be a possibility that it might just come here and then from here you can go in for a buy, right? But I'm just afraid that when it comes here, this zone may not be strong enough to hold price. It might break and then continue down, right? But based on current trend, current volume, it might just reverse this. So let me just pull out other indicators. Stochastic. Sorry, I'm taking my time with the webinars, with this analysis because I want it to be a high probability analysis. So for those who used to follow me, like I used to do these webinars for you guys like 2-3 years ago, remember? I think Jamilu was around when I was doing this, probably AJ as well. I always try to fit like 3 or 4 analysis in one webinar. But the thing is, out of that 3 or 4, maybe only one is profitable or maybe 2 is profitable. So now I only do like 1 or 2, but that 1 or 2 usually ends up being correct. So for me, it's better to do like lesser but quality than more, but like we end up with nothing. Okay, cool. I do not see any signs of divergence. Oh, sorry. I spoke too soon. Let me know in the chat box, Jamilu and the ones that are more like has been here for a long time, if you guys see any other. Okay guys, I don't like this. This is a form of divergence because price is going up here and is respecting this trend line very nicely, right? But when you look at the RSI, price is also moving in that very nice uptrend, but on the RSI, price has already broken to the downside. Do you see how whenever I pull out RSI and not RSI, sorry, stochastics, it looks correct. There is a bearish hammer. Okay, thank you, Jordan. Yikes. Okay, I guess this is a sign. Okay, so I don't think this part is gonna hold. I don't think this part is gonna hold, to be honest. Okay, I'm happy with this. Even though there's a bearish divergence, it could still be a possibility of price going like doing this and then coming here and then coming back up. Why? Because the bearish divergence could just be a pullback. It could just be a pullback, right? Right. So it could just be price bearish, going bearish and turning downtrend so that it can pull back to this area. And then this area, when price gets to this area, most likely we're gonna get a lot of like dojis, a lot of like spinning top, spinning bottom, whatever it is, because there will be uncertainty, because then people will wonder like, okay, is price gonna break from here? Is it gonna go up from here, or is it gonna go down? Okay, so yeah, I'm settled with my analysis. I have decided like what I want to do, because I also do not want to spend too much time dwelling, like, because if you over analyze, you're gonna end up being like not doing anything. Okay, let me see. RSI is still respecting. RSI is still looking good. It's just stochastics, right? It is just stochastic. So be cautious, because not everything is lining up. Okay, so reason for buy. Number one, still on uptrend, on daily, on H4. Ichimoku showing bullish. No divergence on RSI. Moving on very clean channel. Bullish channel. Okay, why did I choose this rather than this? Okay, reason I chose sorry, just ignore all my typos, okay? The typos are not important. As long as you guys understand, that's the most important. Okay, because stochastics is showing bearish divergence. Sorry, Jordan is saying bearish hammer. Okay, so because of these signs of bearishness, I feel like price is not going to hold in this area. Price is not going to hold in the area. It's going to break, it's going to come here, and then it's going to try to test this area. If it successfully tests this area, I would go in for a buy. How do I know if it has successfully tested this area? Okay, I think this area is a very strong area. Let me give you a reason. Give you my reasons of why I think this area. Number one, price has come here 1, 2, 3, 4. Let me see more times. 5 times. Right now it's coming the 6th time. Price has tested this area 5 times. If it comes back, it will be the 6th time. The fact that it has tested 5 times and did not break means that it is a level to look out for. Other than that, there is 50% Fibonacci retracement, 61.8% Fibonacci retracement, and 161.8 Fibonacci projection. Okay, so there is 3 reasons, like 3 Fibonacci lines, that makes me more confident that this area is a strong area. Other than that, there is a Fibonacci cloud, sorry, not Fibonacci, Ichimoku cloud right here. So for those who don't know, this cloud is actually a form of support and resistance. The thicker the cloud, the stronger the support or resistance is. So you see here how thick this cloud is. It means that this part is a very strong, hard part for price to break. It does not mean that it's impossible to break. It just means that it's hard. Okay, so eventually price did still break it, but you see how it broke it? It had to go sideways. It broke the cloud by going sideways and not like a very strong downward trend, because this shows some kind of resistance. Okay, so the same, this cloud here will also work as some kind of resistance. So when price comes here, it first needs to break all these Fibonacci levels. It needs to break this very strong support here, and then it needs to break the cloud. If it successfully breaks the cloud, I am very very, very sold on the idea of price finally being bearish. If it does not break the cloud, I think we are still bullish. The next time I see you guys Monday, it will most likely still be a bullish chart. Okay, so still bias for a buy. I'm gonna wait for price to pull back here, pull back to this area. It's going to have to fight very, very hard for it to break this area. If it breaks this area, then fine. That's totally fine, because there's already so many reasons that it won't break, but if it breaks, it's fine. Therefore, I'm going to put my stop loss here, because for it to reach my stop loss, it needs to put up a very strong fight for it to reach my stop loss, right? I think it's going to be hard for price to reach my stop loss, so I'm going to put it right below the cloud. You see this cloud here? I'm going to put it right below the cloud because it first needs to break all of these things and then break the cloud before it can reach my stop loss. Okay, so the Ichimoku cloud will basically work as my final defense before it reaches my stop loss. So stop loss, possible entry, buy entry. Okay, where am I getting in for a take profit? Where am I getting in for a take profit? I think this is a good one because again, price came here so many times and respected this area. So if price comes back down and then goes back up, it's gonna probably respect this area and do this and then do this. Okay, so I'm pretty happy with this analysis right now. But other than that, I think if it doesn't break this area, right, it means that we are still good for a buy. If it's still good for a buy, I do think that this time around it might try to reach higher, which is somewhere around here. Okay, so this is the possible take profit. This is another possible take profit. We're being very if I'm being very conservative, I'm just gonna like wait for this to happen and then I'm gonna play to this area. So we're talking about long position. It's a 2.5 trade. It could be better, right? It could be better if I move my stop loss a bit higher. Yeah, the trade can be a bit better. It's just that why I put the stop loss here, giving it good distance, is because I do not want to risk wicking, right? Because EUR USD also wicks quite a bit. Do you see how long this wick is? Do you see how long this wick is? Okay, there is also a chance that price might come here and then wick and then go back up. But to avoid that from happening, honestly, you can go down to the smaller time frame and look for the reversal signal before getting in. If you look for the reversal signal, I usually put my stop loss right below that reversal candle and then I get in, like then I have a really tight stop loss. Okay, but that's what I did with my trades last week. That's why I did so good in the profits, because my stop loss was so tight. Okay, for those who don't know what the reversal signals are, reversal pattern candlesticks. I have googled this so many times that it is in my auto. Okay, so when price gets to this level, I want to go down to the smaller time frame, which is the 1 hour time frame, or maybe even the 15 minutes. Oh, this is new information, guys. On the 1 hour time frame, the cloud actually ends here. It needs to turn bearish, reaching our our entry before it can, for this to work out. Okay, so I mean, it's really hard because price could either reverse here, where the take profit is, or it could just reverse here, or it could reverse here. I want it to, I'm aiming for it to reverse here because that's a safer trade. Okay, but if it reverses here, there is still a possibility as well. Okay, the reason why I think it's going to reverse at the bottom is because of this stochastic showing bearish divergence and there's a bearish hammer. So I expect a bit more bearishness. If the bearishness only lasts until here, then yeah, then you like I will get in here for a buy. But usually for indicators to show divergence and to show other other indications of bearishness, they should be a bit more bearishness. Okay, so it could either be here or here, but I am a bit more biased of it being here. Okay, cool. Okay, so I'm gonna go to the 1 hour. When price moves to this area, I want to look for a reversal pattern candlestick. Reversal pattern candlestick. So bullish, I want to look for a bullish reversal pattern candlestick. I want to look for a hammer, inverted hammer, bullish 3-line strike, bullish engulfing, tweezer bottom. This is what I am looking for. If I go down to the 1 hour and I see it, that is my last signal to get in for the buy. Okay, everyone good? All of this has to be fulfilled, then we can get in for the buy. Okay, so this, and then I'm going to put this. Requirement to get in on buy. Reversal pattern candlestick on lower time frame. Okay, reversal pattern candlestick on lower time frame. Yes, if you see a reversal pattern candlesticks here, that is a good sign to get in for a buy. If you see it here, you can I can still get in for a buy. Sorry, it slipped. I can still consider getting in for a buy. It's just that I want to be a bit more cautious because of the stochastic bearish divergence and because of the bearish hammer. Okay, I want to be cautious. Other than that, I think I'm happy with this. How confident am I on this trade? Probably 70%. So last Thursday when I did the analysis, I was like 90% confidence. I had 90% confidence. I thought I had like a 10% chance of getting it wrong. But today, because of the bearish divergence and because of the bearish hammer, it kind of makes me question a bit. So I'm 70% confident that this is going to work out. Okay, there is a 30% chance of me getting it wrong based on what I feel, right? And there's a 70% of it for me getting it right. Okay, so other than that, I am happy with this analysis. Let's move on to XAU-USD requested by Henry. Let's just, for XAU-USD, I'm just going to highlight levels, okay? Oh, so messy. Let me delete everything. Okay. For XAU-USD, I definitely do think that it is a buy. From my webinar with you guys 2 weeks ago, I called for a buy and I still think it's a buy. Right? So daily chart showing very clear, very clear bullish trend. Let's go down to the 4 hours. Okay, 4 hours is kind of it's kind of like conflicting with what the daily is showing. So if we zoom out, technically it's still on an uptrend because price is still making the higher lows and it's still making the higher highs. Okay, it is still making the higher highs because technically this could be just this and then the next one could just be boom. Right? So technically we are still on an uptrend if we zoom out. If we zoom out, we are still on an uptrend. It's just that when you zoom in and you only focus on this area here, it is a downtrend. Remember, a downtrend and uptrend is just higher highs, higher lows, or lower lows and lower highs. So this is the high, the next high is lower, and the next high is lower. And this is the low, and the next low is lower, and the next low is lower. So this would constitute a very clean... Sorry, I'm going to get rid of this one. This doesn't really count. It's not that clear. This will constitute a very clean swing low and downtrend. Okay? It's doing like a W. Right? And I think that W is a chart pattern. Okay, never mind. Never mind. Because chart patterns don't hold a lot of value in technical analysis. They hold some value, it's just not that important compared to support resistance and other things. Okay, so I do see this very nice and clean bearish channel making me kind of believe that it is on a short-term pullback. Gold is on a short-term pullback to the downside, but that's totally normal because because price is constantly moving in a zigzag, right? It needs to pull back for it to form that zigzag pattern, right? To form that like moving up or down pattern. So it's probably just pulling back right now. Let me just pull out a channel. Don't fuss so much on how I draw it, because remember, price is never like, it's never one fixed price. It's always like a zone. So based on this channel, the zone is being respected very nicely. Price came here 1 time, 2 times, 3 times, and then it kind of came. Let me just draw this a bit tighter, somewhere like this. Right? Okay, even if it's not a perfect channel, it is still a perfect trend line. So let me pull a trend line. Okay, so a valid trend line will require 3 touches. So we've got 1 touch, 2 touches, and 3 touches here. So it is moving in a very clean and nice downward bearish channel trend line. There's no reason for me to suddenly think that it's going to break out now, right? Because it's moving in the nights downwards. I'm not gonna suddenly think, oh, price is gonna burst up now, right? I'm not, because we base our decision on the information that we've collected. So based on the decision, based on what I've collected, it is moving in a downtrend. I'm going to continue to think that it's going to move in a downtrend unless I see a bullish divergence, unless I suddenly see signs of bullishness. At this current point of time, I'm going to think that it's bearish. Okay, let's pull out some horizontal levels. I'm going to mark the last swing high, which is there, and the last swing low, which is here. And the last obvious swing low, which is here. Why did I choose this box? Price came here 1 time, reversed, came here a 2nd time, reversed, came here a 3rd time, reversed, came here this little 4th time. I think that one's not counted. Okay, came here kind of like a 5th time, a little small one here, reversed, came here a 6th time, reversed, and then a 7th time. So this red area here, this zone, is definitely a zone you want to look out for. Okay, so if price comes here, I do think that there's going to be some kind of reaction. Oh, if we zoom in even closer, you can kind of see a very nice uptrend here. Okay, so it could just do this and then go back up, or it can do this and then break. Let's see what our bias is. Okay, I'm still going to play the sell, because although this is a mini uptrend here, on overall there's a bigger downtrend. I want to follow the trend of the bigger structure, because the bigger structure will hold more value than the smaller structure. Although the smaller structure does give you some information, it does not necessarily mean that it is going to work out. Okay, so based on the bigger structure, it is a downtrend. Based on this small little area here, it is an uptrend. I am a bit more biased of still going with the downtrend because of this bigger structure, right? When I make my decisions, I always base it on the bigger structure based on the lower structure, because price is usually doesn't respect the lower structure that much compared to the bigger structure. Okay, so there's a possibility price is gonna come here and then it bounces and then, you know, it ends up being a buy. But because I'm a bit more biased of a sell, based on this area, I do want to get in on the sell, right? So to get in the sell, I need price to come here, break this area, retest this area, and then I get in on a sell. If that does not happen, I do not get in for the sell. If price comes here, it's very, very clear, it's very obvious that price cannot break this area. How do I know that it's obvious that price cannot break this area? reversal pattern candlesticks keeps appearing. What are those candlesticks? Those uncertainty candlesticks like dojis, common dojis, long leg dojis. These are all the candlesticks that will show uncertainty. It means that price is having a hard time breaking this area, and then that is when, if all those candles come out and it's kind of like going sideways, that is when I will feel like, okay, price is having a hard time. I might want to consider getting in for a buy. Before anything happens, I need to wait for price to get here and then tell me what to do. So if it is a sell, it is gonna break, come back and retest. I get in for the sell here, and then I play to the next level. If it is a buy, price is going to come here, it's going to struggle to break, and then I might consider getting in on a buy. Okay, so let me pull out some indicators to see where I'm a bit more biased to. Yeah, okay, so price is kind of moving on a sideways pattern. When price is moving on a sideways pattern, do not use Ichimoku cloud. Ichimoku cloud only works on trending charts, okay? It needs to be a very clear uptrend like this, or a very clear downtrend. I mean, gold has been doing a very clear uptrend, okay? If it is moving sideways, do not use Ichimoku cloud because it is not going to give you accurate information, okay? It is not going to give you very accurate information. Even if it does give you accurate information, the trades usually last very short. It's going to be very, very short trades. So it's going to be like very short. Okay, so I'm gonna not use Ichimoku for gold at this current point of time because of the structure of the charts. Let me pull out RSI and stochastics to see if anything else is showing. If you guys do see anything else, don't be shy. Let me know in the chat box if you happen to be looking at something and it's showing. Just let me know in the chat box. You don't have to be shy. We are all here to learn. Honestly, this could be a, what do you call this? Hidden divergence, right? For those who don't know what I'm talking about, stochastics divergences. I need that. Okay, so this is a, no, this is not the one. Sorry, there's another one. I have it printed in my book. I just don't know the exact one. Okay, there. Bearish diversion. On the oscillator, price is showing straight, like a straight line, but a straight line. But on price is an uptrend. Okay, so this is exactly what I see, right? Okay, on the oscillator, we can see that on stochastics, price is respecting this area, but on the charts, price is going on a downtrend. Do you see that? Sorry, I drew the downtrend on the wrong side. It should be on the top. Yeah, the downtrend should be drawn on the top and not the bottom. Sorry. Right, so that is indicating a bullish divergence. It's straight on one side, but going down. Oh, sorry, bearish divergence. Okay, so do you see that on the, this is definitely a divergence. Give me a sec, guys. Yeah, it is showing a bullish divergence actually. Okay. Can price come here and reverse? Give me a sec. I need to pull out Fibonacci. Okay. Very clear signals. Okay, nothing. Yep, I am happy with the sell. Okay, scratch that, guys. I probably won't consider the buy. If price comes here and it rejects a lot, I'm just gonna stay out of the market because I saw a divergence on the RSI and the stochastics is showing something else. Okay, it's too conflicting. The only way I'm going to get in on gold is if price breaks here, comes back, do the retest, and I get in here for a sell. This way, I'm totally not so... The only thing I'm playing when I'm doing this is using the current bearish trend to... The reason I'm considering this trade is because I'm using the current bearish trend and using support and resistance to get in. Okay, this is not a very strong setup. I think I'm like 60% confident with this one. I don't love this setup. I really do not love this setup. Okay, but if price comes here, do this, my stop loss is going to be here above this. My take profit is going to be here. Yeah, that next zone. So it looks like a very good risk to reward. It looks like a very good risk to reward. The problem is there is a very high chance of me being wrong, right? The risk to reward is great. Look at it. It's probably like 1 to like, let me see, what is it? 1 to 4. Okay, we're talking about something like 1 to 4. 1 to 4, you're risking 1% to make 4%. So let's say you're risking $1,000, you're going to make $4,000 if this plays out. The problem is because I have so low confidence in this, it's only a 60% trade, there's a chance this might not even work out. Okay, but when if price really breaks this area and come back here and retest, I will look at it again. But at this current point of time, there's just too many conflicting informations. I usually only want to get in on setups when everything is aligned. RSI is saying it's a buy. Stochastics is saying it's a buy. Ichimoku is saying it's a buy. Support and resistance is showing very strong and clear levels if the trend is clear. So I only want to get in on setups that are very high probability, high setup trades. Otherwise, I do not want to get in because why do I want to force a trade and then end up getting burned? Right? So like I said last week, I did 6.5% profits. That 6.5% profit is from 2 trades. This was very high probability trade. For both the trades, I was at least 80% confident on the trade outcome. right? I was at least 80 to like 90% confidence of the trade outcome of what will happen. Right now for gold, there's a lot of conflicting information. I think this might work out. Am I very confident? Not really. EUR USD, the one we're looking at earlier on, my probability of it working out is a bit higher. It's not that I don't believe that price is not an uptrend. I think this might work out. I'm just afraid that price will not reach my buy entry. There is a chance price will come here and then turn here. Okay, there is a chance price will come here and then turn here. I'm a bit lower on confidence on this. I am happy with the analysis. I'm just afraid that price will not reach my entry. If it doesn't reach my entry, that's fine. I'm going to stay off the market. If it reaches my entry, that's the best case scenario when I get in and then I play this trade, right? So that's all I have for you guys today. Hopefully one of the setup works out, either XAU USD or EUR USD. Trust me guys, I want this to work out as well, because these are trades that I personally look out for as well. The only time I trade is when I come on these webinars and look for the analysis together with you guys. Otherwise, on my off, any other time other than these webinars, I don't really look at the charts. Like I said last week, I took 2 trades, and 2 trades was because I had groups. I had these sessions. Okay, so that's all I have for you guys today. Thank you so much for joining. Thank you, Jamilu. Thank you, Jordan, Henry, Duke. Oh, Duke. I feel like you've been here for a while, like from when I was here a few years ago. AJ, Bob, that's me. Okay, then the rest of you, take care. I will see you guys in a week. Hopefully things play out and then we can discuss about the trade. Okay, bye guys. Take care.